Welcome back to Investing Talk podcast. Today we're taking a focused look at NanoVibronix. You send us a collection of information, recent updates, a due diligence report, a company overview, so quite a bit to work through. Our mission here is really to, distill what's important and understand the recent activity around this medical device company.
Okay, let's get into it. NanoVibronix.
Mm-hmm.
They're based in Tyler, Texas.
That's right. But the R&D, that's in Israel. They focus on non-invasive therapeutic devices.
And their core technology, that stands out straight away.
Yeah.
It's this patented low-intensity surface acoustic wave SAW technology.
Exactly. And what's really interesting about this asset tech, it's the foundation for their main products. We've got Pain Shield for pain relief and UroShield. Now, UroShield tackles a really significant problem, preventing urinary catheter infections. It works by disrupting biofilms and bacterial colonization.
Biofilms, like that protective layer bacteria form. Precisely. Think of it as this stubborn, slimy shield bacteria build on the catheter surface. And the fact that both devices are portable, usable at home or, any care setting, that seems like a huge plus these days.
Definitely. And this is where it gets particularly interesting, the timing. There have been some recent positive developments and a definite market reaction around May 1st, 2025, based on what we've got. The big one seems to be getting full Nasdaq compliance back on April 9th. Meeting the bid price, the stockholders' equity. That feels critical.
Oh, it certainly was. Regaining compliance, it's not just about, dodging delisting. It really widens their appeal to institutional investors. And it can unlock future fundraising, which is, vital for a medtech company at this stage.
Right.
Now, they are still under a mandatory panel monitor until April 2026, I believe.
Okay, so continued oversight.
Yes, continued vigilance is needed. But clearing that first hurdle, that was definitely a positive signal.
And it wasn't just the Nasdaq news, was it?
No, not at all.
They also renewed and extended their exclusive distribution deal with Duke Hill Healthcare in Australia, expanding to all states now, focusing on South Australia and Victoria. Sounds like a solid international move.
It really does. That Duke Hill agreement renewal and expansion, it signals real confidence in the products from an international market. Pushing into all states, focusing like that, suggests a strategic market entry and potential for real revenue growth outside their main base.
So the market clearly noticed. The stock jumped, nearly 50% intraday on May 1st.
Wow.
That's a pretty big leap. Seems investors liked both the compliance news and the Australia deal.
That surge, it directly reflects that positive sentiment.
Yeah.
You remove the delisting worry.
Right.
Then you add the prospect of more international sales from that expanded deal. Well, that created significant upward momentum. It shows how these operational wins can really move the needle on perception, especially for companies like NanoVibronix.
Now, UroShield, the product you mentioned, it has some compelling validation, doesn't it?
It does.
An independent study showed positive outcomes in preventing those catheter infections. That kind of data has to be key for getting it adopted more widely.
Absolutely vital. Clinical validation like that, and this one was noted in the Australian and New Zealand Continence Journal, it lends serious credibility, not just in Australia, but it could help with regulatory approvals, adoption, really anywhere else they want to go. Evidence is king in medtech.
Okay, let's pivot a bit to the financials. We have some recent numbers. Revenue reported at $4.44 million for the latest period, and it seems linked to that international expansion, UroShield in Australia specifically.
That $4.44 million revenue figure,
Yeah.
It's interesting contextually. While we don't have, say, a 3-5-year trend in front of us, seeing that connection between revenue and the international side, especially UroShield down under, it really underlines the importance of that Duke Hill deal we talked about.
But on the flip side, net income is negative $1.43 million. So negative EPS, which, as our sources point out, isn't that uncommon for medtech firms still in the pre-profitability heavy R&D phase.
That's a really important point. Negative income at this stage isn't automatically a red flag by itself. It often just reflects big investments in R&D, clinical trials, getting into the market.
Yeah.
The key thing to watch is how revenue grows compared to those expenses over time.
And the PE ratio, price to earnings, is NA. Makes sense with negative earnings.
Right.
The sources mention an industry average around 25-35x for medical devices, but obviously not comparable here yet. However, their debt-to-equity ratio is 0.19. That seems pretty low. A good sign for stability.
Yes, 0.19 is quite favorable. It suggests they aren't heavily leveraged, not relying too much on borrowing.
Gives them flexibility.
Exactly. Financial flexibility. That's really important for a company that's still growing and maybe isn't consistently profitable yet. It provides a cushion, reduces risk.
Okay, so who are they up against? The competitive landscape. They're in medical devices, specifically non-invasive therapies and infection prevention, and that patented SAW technology is flagged as a potential edge.
That saw tech, it could be a real differentiator for them. UroShield, going after catheter-associated UTIs, that puts them in a market with some big established players, like Becton Dickinson or Conva.
Right, the giants.
Yeah.
Yeah.
So while NanoVibronix doesn't seem to have cost leadership or dominant branding right now, that unique tech could be their way in. They're key to carving out a niche and grabbing share. You could speculate maybe that the patent creates a barrier for others, or that the SAW mechanism just works better than older methods for this specific problem.
Makes sense. Let's dig into the risks and opportunities a bit more. That Nasdaq mandatory panel monitor until 2026, that feels like an ongoing regulatory risk, doesn't it?
It does.
If they slip up on compliance again, that could cause volatility.
It definitely introduces a layer of oversight investors need to track. They got back into compliance, which is great, but they need to stay compliant. Consistent adherence is crucial to avoid more issues and keep investor trust.
On the flip side, though, some potentially big growth catalysts. The UroShield clinical validation could speed up approvals elsewhere, right? FDA, CE mark, maybe?
Potentially, yes.
Yeah.
Positive data is always helpful in those submissions.
And that DoKill partnership strengthens their foothold in the Asia-Pacific.
Absolutely.
Plus, the general trend towards non-invasive home care devices seems to play right into both PainShield and UroShield.
Those are all really strong points. Good clinical data is powerful. The DoKill deal gives them a clear path to grow internationally. And you're right, that shift towards home healthcare provides a nice tailwind for portable devices like theirs.
So putting it together, what's the market sentiment?
Yeah.
What's driving the stock right now? Seems like the recent news, Nasdaq Australia, has generated a pretty positive vibe.
I think that's fair to say. The market's reaction, especially that May 1st jump, shows investors saw regaining Nasdaq compliance as taking a big risk off the table. Then the distribution news added a clear signal for potential revenue growth ahead. And the fact this happened without fresh earnings numbers suggests the market's currently focused on these operational milestones as signs of future potential.
Our sources mentioned investors might check online forums for real-time sentiment. No specific ones named, but it's a reminder that chatter happens online.
It does, but it's worth saying, you have to be careful with forums. Information there is often unverified, speculative. It's good for maybe getting a feel, but always prioritize official company news and reliable financial sources.
Good point. Okay, let's quickly recap the strengths and maybe red flags or concerns. Strengths. Innovative SAW tech, those new distribution deals, positive UroShield study results.
Right.
Concerns, maybe those past NASDAQ compliance issues, even they're resolved, the fact they're still monitored.
That sums it up well. The strengths point to the growth potential, the differentiation. The past compliance stuff is just a reminder of, potential vulnerabilities and the need for solid management and financial oversight going forward.
Looking ahead then, the future outlook based on what we have seems like more product approvals, increased adoption. Those are the key potential catalysts. And naturally, regulatory shifts, market demand, those are always factors to watch.
Definitely. Their future really hangs on leveraging those catalysts.
Yeah.
Getting more approvals, driving adoption that's critical for growth, and navigating regulations, adapting to the market. That's just constant in this industry. So yes, maintaining NASDAQ compliance and making that distribution expansion work are absolutely fundamental for their longer-term prospects.
So bringing it all together, what's the overall perspective on NanoVibronix from these sources?
Well, based on what we've looked at, NanoVibronix comes across as a company with definite potential in med devices, driven by that innovative tech and some smart recent moves. But the ongoing regulatory watch and the need to show sustained financial improvement mean a cautious approach is probably wise. For investors interested in medtech innovation, maybe with a tolerance for the risks that come with growth companies, it could be an interesting one to watch. But thorough due diligence on financials, market trends, absolutely essential.
So looking at your sources, it seems NanoVibronix has navigated some pretty big hurdles recently. Getting the NASDAQ compliance sorted, expanding in Australia. The tech behind their devices, especially the promising UroShield data, really looks like a key differentiator. But like any investment, you really need to grasp both the growth potential and that ongoing regulatory picture. We hope this breakdown has given you a clearer view of what's driving the conversation around NanoVibronix. For more detailed info, you can check out their investor relations page or look at financial data providers. And always remember to do your own thorough research. If you found this helpful and want us to unpack other companies or topics, please subscribe, like, and comment.